Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. When this carry trade is over, lower interest rates will be the main thing that causes the market to move from a small group of stocks that are very concentrated to a larger group of stocks that are spread out. Also, as I said before, today's video is with Cathie Wood, who has 40 years of experience managing different market cycles. She talks about the current market, how it affects different industries, and ways to diversify your portfolio. But the VIX went over 65 this week, which is the fourth most important indicator of market instability in the last 40 to 50 years. I've been there for all of them. It comes in at number 4, following the tech and telecom bubbles of 2008 and 2009, and the 1987 and 2000 busts. What does this volatility alert mean now? Most of the time it means that the market is about to have a healing moment or is already in one. Most of the time it means that something is happening. We've thought for a while that the US economy, and maybe the world economy as a whole, has been in a rolling slowdown ever since the Fed started raising interest rates, as you know. Besides that, there seemed to be a rise in the carry trade at that time, which involved borrowing yen, which is really shorting yen and investing the money in assets with better returns than those in Japan. So putting down the spread. The weakness of the yen is another reason why this move has become so popular. A person who shorted yen was betting or investing that the value of the yen would go down. That all changed quickly this week when the Bank of Japan raised interest rates more than most people thought they would, and seemed more eager than most people thought they would to keep doing so. It looks like there are a lot of assets and a lot of margin calls. The VIX has now settled down. Now, we're not sure if the carry trade is over for good. JP Morgan says we're almost there. In that case, there may be more change. I do think that the Fed is now on high watch, though, because the stock market seemed to be telling the Fed to keep rates high for longer to make sure that inflation was gone. We've been saying for a while that inflation is falling much faster than the standard indexes show. The CPI is at 3.1 right now. In other ways, though, prices are going down. We also think it would be a surprise if prices fell a bit more widely as people's finances got worse. Now, why is the customer going to get weaker or keep getting weaker? We think it's because businesses are losing the ability to set prices. There are two things they are going to do to save profits. They are going to fire people, and they will speed up efforts to make things more productive. The number of people without jobs will rise. We're hearing Chairman Powell talk about how that is making the Fed change its mind. Today, I think that the fact that the stock market drop has hurt people's net worth is another reason why the Fed will give up. One more thing to think about. The stock markets should do very well when interest rates go down, but they won't be able to stop a decline right away. In fact, what will people and businesses do if they know that prices and interest rates are going down? They're going to wait. That being said, we think the market already knows a lot of what I've told you. So we do believe. The rebound in the crypto markets on August 9th is like the strength seen in US stocks. The Cobus letter says that the US stock market has gone up 5% in value in the last 24 hours. The SP index is having its best day since November 2022. Both the SP 500 and the Nasdaq have hit all-time highs in the last 5 days. The SP 500 has gained more than $1 trillion. The Kobe letter says that the market cap rose 0.4% every day on August 8th. Finally, hearing from the Bank of Japan has made the markets feel better. And the end carry trade still seems to be going strong for also. The number of initial gibless claims in the U.S. dropped to 235,000 in the week ending July 20th, according to figures released by the U.S. Department of Labor on July 25th. These numbers were higher than the previous week's gains of 250,000 and lower than the first estimates of 240,000. During the week ending August 4th, continuing claims also went up by 21,649 to 1.96 million. People in the market are still worried about what the current state of the economy might mean for the way the Federal Reserve handles money. The Federal Open Market Committee (FMC) is set to meet on September 18th. Many people think this will be the first rate cut since March 2020. People in the market think that interest rates will go down 1 or 2 times by the end of the year, in September and November. This tool from the CME Group says that there is a 100% chance that rates will be lowered at the September FMC meeting. Think about those two things. What does it make you think about where we could go from here? Well, I think buyers can check weekly jobless claims every week to see if there are any signs of growth. That's what was a good surprise on Thursday, and a lot of it came from Texas. The number of claims in Texas dropped a lot from one week to the next. The market's strong response to the jobless claims number on Thursday leads me to believe that it is one of the main factors. The market went through a big jump after the number came in higher than expected. I think investors are worried about growth. Next Thursday, they'll get another weekly claims number. If that number is also stable or growing, I think it will give people a lot more faith. What about when the carry trade ends? It's hard to say if that's finished or not. That was clearly the cause of placement being very off at the start of the week, and it just needed to fix itself. Is it over now? Hey Scott, that's a great question. That carry trade is not known to be very big. Perhaps. I think a lot of people in the insurance business are involved in that, and I did talk to some insurance leaders last week. They think that many financial institutions actually made this trade, but that it won't be a problem if it ends in a normal way. Because of this, having weeks or days like Monday or the end of last week is very disorganized and costs a lot. On August 9th, money started coming back into the US-based spot Bitcoin ETF. These funds now had about $54.3 billion worth of Bitcoin, up from $48.13 billion on August 5th. Spot Bitcoin ETF capital flows went positive over the last 2 days, with net inflows of $45.1 million on August 8th and $94.6 million on August 10th. This comes after 3 days of straight-out flows from these investment products. At the same time, the first Spot Salon ETF was approved by the Brazil Securities and Exchange Commission (DVM). This is a part of a bigger trend that began when several countries allowed Ethereum ATN spot Bitcoin. This new event makes it possible for more crypto ats to happen all over the world. It also shows that Bitcoin and other cryptocurrencies are being accepted more in the real world of finance, which is good for the crypto market's value. Rise in the last 24 hours, short sales have sped up in the swaps markets at the same time that the crypto market has gone up. It is shown on CoinLast that short players who bet that the crypto market will go down have lost a total of $10.92 million in the last 24 hours. Long players, on the other hand, have lost more than $76.8 million in the same time frame. At the time of this writing, the number of short Bitcoin liquidations was 58.6 million, and it was still going up. Traders who think prices will go down have to sell their positions, often at a loss, when short options are closed. This has made more people want to buy, which has raised the value of the market today. Please remember to join our group.